According to data released on the FMDQ Securities Exchange, the official forex trading portal shows that the naira opened 779. That's on Friday, August 11, and closed 740, 60 kobo per dollar. According to analysts, some of the key issues in investment environment are related to policies, especially the country's foreign exchange segment. The World Bank and IMF had severely urged the government to overhaul its exchange rate policies, which they believe were keeping investors at bay. Let's continue to understand what is happening in that market. And joining me to do this, to talk more about this and what it means for the entire economy, is the Director of Research and Strategy at Chapel Hill Denham, Mr. Tajudeen Ibrahim. It's good to have you on the show. Thank you so much for your time.
Thank you for having me on the show today.
Yes, I would say that it's indeed worrisome. The other market, the naira to the dollar exchange rate was above 900 naira with what we saw, and many have ascribed this to series of developments. You are in this sector and understand what's been playing out after the directive by the president and the central bank to open up the market, at least for free flow, allow demand and supply to run the foreign exchange market. Where are we at the moment? What more needs to be done for us to be able to get this right?
So it is remarkable that we have a liberalized FX market, and I think in the past few weeks, Nigerians, generally speaking, particularly those of us in the financial or in the capital market space, have spoken positively. Even foreign investors have responded positively to that liberalization of the market. But I think it happened without the necessary development. It is good that we liberalize the market, but I think what should have also happened is an increase in the supply to the market by the the CBN, and that is one. The second thing that I think is also important to happen is for us to have elevated yields at the short-term, for short-term instruments, talking about either treasury bills in this case, or considering OMO bills. So those are some of the instruments that the central bankers, the governors, in the past have used to attract foreign investments into the country. I think that should also be considered. And I think there is also a need for the CBN to revisit the issues around BDC operators in the country, and particularly given their impact in the market. We have seen relative stability at the iron here window, which is the official market, within the past 1 to 2 months. But the reality is that we began to see volatility at the parallel market, and that is where the pressure is, and that is where we have to address those issues in there.
The CBN came out this morning, over the weekend, although it was reported in print and everywhere, and we also reported it, that banks should also be very careful and not involved in any form of illegal trading of FX. But some would tell you that it's because it's not available. Maybe that's why this is happening. And another school of thought says, if Port Harcourt refinery comes on stream as expected by the end of December, we might begin to see a reduction. It's like a two-in-one question. Take it up from where you want to start from.
So if we take a look at what is happening in the parallel market, where we have seen significant pressure on the naira, to my mind, and from what I know in the past, it has been driven by speculation by by Nigerians, both on the retail side and also by institutions, who are speculating on the currency. So, and when the CBN came out to say the banks should not be involved in illegal transactions, I think the CBN will have seen or heard about a few things, and that is why they came out. And to my mind, I think that can be addressed. And the way to address it is to give the banks the opportunity to invest their huge naira liquidity in attractive short-dated instruments. And that, to my mind, partly speaks to the reintroduction of OMO bills in the market last week, where we saw yields on those instruments being as attractive as 14.5% at the 1 year OMO bill. So I think that is important for the CBN to focus on. The second question is around what we are experiencing or what we expect around Port Harcourt refinery. It is spot on that if we have that refinery running, we will be refining locally, and that to some extent, no matter how little it is, will reduce the cost of producing petroleum products from crude oil. So I think it is positive, and it should to some extent positively reflect in the pricing of petrol in the market. That to some extent should see us should lead to reduction in the prices of petrol, and Nigerians at that point in time could begin to be hopeful that the Kaduna refinery will be fixed, and also the other refinery, to ensure that all of them are running and we can see the benefit to our pockets.
Indeed, the benefits to the pocket is very important at this time, Mr. Taj. Let's move quickly and understand sources of FX for Nigeria at the moment. Diaspora remittances, export proceeds, of course, our crude oil sales, which seems to be doing better now. Government is fighting on crude oil theft head on, but we are still yet to get to OPEC's quota. Now, what more can we do to make some of these initiatives or some of these sources of getting in FX? How can we make it more attractive to...
Okay, so
go ahead.
Okay, so you have spoken to a couple of factors and sources where we get FX from. That is the diaspora remittances, which is also sizable. Crude oil sales, which is significantly big and a major contributor to our FX inflows. We can also partly speak to non-crude oil exports, but that is small. But there is one big factor on the table that I believe the central bank, the government should work together on to ensure that we have accelerated inflows from that channel. It is the foreign portfolio investment channel. That channel is one channel where you can easily get inflows that will cushion the impact of the illiquidity that we are seeing in our foreign exchange market. How do we do this? To my mind, we need to have OMO bills, for instance, to be elevated in terms of the discount rate and the yield to around 20-22%. I spoke to a foreign investor earlier this morning before coming to this show, and the conversation was, can we have short-dated instruments at around 22-25%? So the foreign investor in this case was willing to bring in dollars if we see short-dated instruments yield at such an elevated level. That, to a large extent, will compensate for the risk that they want to take in Nigeria. So if we have that segment of the yield curve being attractive enough, we will be able to attract what I call new money. Last week, the OMO auction of last week had, largely speaking, old money that are in the market by foreign investors, taking part in the auction. But to attract new money, which is what I believe will, largely speaking, reduce the volatility we are seeing, we need higher interest rates for foreign investors to come to this market. And one key thing has happened. About a week ago, we had the S&P upgrading Nigeria's credit rating outlook to stable from negative. That, to my mind, is an early sign that Nigeria is going to see an upgrade in its credit rating by, foreign credit rating agencies. And if that is the case, we are most likely going to see more foreign investors be interested to bring in new money into the economy for investment purposes. The regulators should be ready ahead of that inflows. Those are my views.
Indeed, interesting stuff, because when those monies come in, one way or the other, they will help to address this shortfall that we have presently with regards to our foreign exchange market. But let me take it further. Let's talk a bit about improving exports. And when many talk about export now, they talk about adding value. It's a process. Do you think we have started?
So I think we have not started at all. So let us talk about crude oil, for instance. If we take a look at crude oil, what we do is just to bring the crude from the ground, and then we export it, to foreign markets to get value. But of course, when the refined product comes in, it comes back in a form that shows that they've added value to it, so it comes back much more expensive than it left the country. So we need to begin to add value to crude oil, for instance, and that is by refining. And this is where I will link it to Dangote refinery, although that is a business by a corporate entity. I recognize the fact that it can, to a large extent, reduce the pressure that we are seeing on our foreign currency, because the impact of the freight cost, the impact of the insurance cost that we incur on crude oil export and importing of finished products will reduce, to some extent. So, and Dangote, refinery in itself will also be exporting refined products to other countries for the country to earn US dollars inflow. Those are, to my mind, are very key elements that Nigerians should expect to play out from 2024, in my view, not this year, to my mind. There's another element for consideration, which is the local refineries. It is shocking that we have it in the news that Nigeria, in the past 10 years, has spent about $20 billion to fix our refineries, to make them, to come back to action, so that we will be able to be refining locally. But as we speak, there is no result. But we have a corporate entity, Dangote Refinery in this case, which has spent not up to $20 billion. They spent about $18 to $19 billion within a 7-year period to bring, to operation 650,000 capacity of refining, of refinery. And we spent 10 years, spent $20 billion to fix, 3 refineries that we have, which is even lower in capacity at about 445,000 per day. So we need to address that kind of inefficiency. The government needs to take charge in that regard and ensure that our local refineries are working, and ensure that it is done cost efficiently, in my view.
Brilliant stuff as usual there, Mr. Tajudeen Ibrahim. Thank you so much for starting the week with us. But I'll give you 1 minute. What's your outlook? Let's look at it short to medium term with regards to these policies.
So I think the outlook is positive, because it looks to me like the president is deliberate around ensuring that he delivers on his promises to the nation. And I think what we need is just for those ministers to start work after they have been assigned portfolios. They have not been assigned portfolios as we speak. So we need a full cabinet for the implementation of some of the good policies that the government has. Those are my views.
I must thank you so much for your time, Mr. Tajudeen Ibrahim, Director of Research and Strategy, Chapel Hill Denham. Thank you so much and have a profitable week.